Okay, good morning, good afternoon, and good evening, depending on where you find yourself in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Senior Analyst. It is my pleasure to welcome you to the GBBC Virtual Members Forum with GBBC member Tangem. For the coming months, we have been hosting and will be hosting these GBBC Virtual Members Forums to showcase the innovative work of our members around the world. Today, we are joined by Sergio Mello and Andrey Kurennykh of Tangem. Sergio Mello is the CEO of Tangem, and Andrey is the CTO and co-founder. They will be presenting on the essential nature of unhosted wallets to springboard central bank digital currencies into reality and answering live questions from the audience. Before we begin, I would like to briefly introduce Sergio and Andrey. Sergio is CEO of Tangem and is fundamentally a builder and operator who has had razor-sharp instincts for disruptive enterprises, from aviation to transport and communication and business strategy. Sergio has a track record connecting resources and people to build innovation ecosystems that bring disruptive solutions to market. Sergio is an unusual hybrid of European, Asian, African, and American business acumen with an unrelenting belief in the power of blockchain to transform trust for global good. Andrey is the CTO and co-founder of Tangem. Over his career, he has leveraged his talent with computing and microelectronics to disrupt businesses in financial services and telecoms on a global scale, from founding, managing, and successfully exiting ATM management and transaction processing company to developing from scratch SIM card OS and a proprietary security integrated circuit for national SIM card platform. His area of expertise includes smart card platforms, hardware security, design of secure ICs, embedding operating systems, blockchain payment networks, and cryptography. This is a journey that eventually led him to Tangem's revolutionary chip-to-chain technology. We are so pleased to have them both here with us today, and we encourage you to ask them questions at any point during today's session. We'll take the questions at the end of their presentation. Without further ado, I'd like to hand things off to Sergio and Andrey. Thank you.
Thank you very much for the very extensive introduction. You did all my job, so I'm left with starting my presentation. If I can control the screen. Let's start from a place that most of you are surely familiar with, and comes from Bank of International Settlements 2018 report. It's a beautiful flower called the money flower. Describes how supply of money can be segmented with Venn diagrams in various purposes, and specifically helps understanding where central bank digital currency fits in this world. And since you're all familiar with this ecosystem, I'll go straight to the point and explain where we fit with Tangem. This is where we fit. Mainstream, for everyone, widely accessible, digital, clearly, issued by the central bank. And interestingly, we'll see more about this later, both token-based and account-based. It is debated whether this is a proper way to define and to address different type of CBDC. We think that the definition of ledgerless and ledger-based is maybe more accurate, but doesn't really make a big difference because our platform that we will see in the next 20 minutes can support both at the same time, therefore blurring the lines between the two. And so if we see more in detail still from the Bank of International Settlements, how these two types of currencies have been defined in the past, token and account-based, we noticed that for the technologies that were available in 2018, and for the type of analysis that was done for these 5 features, so availability, anonymity versus the central bank, peer-to-peer transfer, interest-bearing, and limits. For these 5 features, it was clear that 2 different types of solutions would yield different freedoms of movement. Adding our component into the solution allows to blur this line, this invisible line between the 2 columns of token and account, and making a general purpose CBDC, 1, it doesn't have to be at this point distinguished between token and account base. Partly because the technologies that are on top of the stack are growing very fast. They're expanding very quickly, and they allow for more and more features by the day. And partly because with our solution, we've managed to push the most crucial component of holding digital currency to the very edge, to the holder and to the card. So it was 140 years ago that the world was growing very fast like today. Today it's 2020, it's a pivotal moment, and we can comfortably say that science fiction is blending with reality. The information age has propelled us through new heights, literally heights up in the sky, going to Mars, having a live low latency satellite-based connectivity, promised to have flying cars again, brain-computer interface, green energy. A lot of beautiful things are happening. But at the same time, we're struggling with the infrastructure, which has been laid for hundreds of years, and now apparently is becoming the obstacle to moving forward at a faster speed. And it is kind of hard to settle on standards and technologies while they improve at an exponential rate, because it's like learning to play the piano with a metronome that keep beating faster and faster as you play. So in order to frame the problem that we're solving today, which is a central bank digital currency for everyone, so mainstream adoption, I'll go back in time, 140 years, to when Nikola Tesla was battling with Edison, and in the beautiful time of the war of the currents. There was a big debate whether alternating current or direct current would eventually become the standard. Which one was performing better? Which one would allow to propel the world to a better place? One proponent was shielding his direct current technology, partly because he had already invested greatly in an ecosystem that revolved around that type of technology. So it was more of a protectionist move rather than ideological or technologically motivated. Whereas another proponent was pushing for alternating current, because he saw the future and he understood that that was the best for mankind. And that would have allowed most people in the world to be blessed with electrical power as fast as possible. Luckily, alternating current won the war, and paired with the invention of transformers, a great breakthrough in technological history was achieved, and electricity could be carried far away from a generation plant, many miles, rather than just a bare 1.5 mile with direct current. And all of a sudden, in a span of a few years, literally 10 years, the vast majority of urban population and also suburban population got powered up with electricity. And mainstream adoption started with, first of all, lighting, then appliances, and a lot of other things that we still use today. Fast forward 140 years, today it's 2020, and we've also been blessed by technology, specifically asymmetric cryptography. Some of you will know it by the name of double key cryptography, which is giving us a lot of tools, and it is as important to the modern world of money as alternating current was versus direct current. The antagonist here is symmetric cryptography. One single key to be shared between two parties. I am sad to inform you that this symmetric cryptography is still around in everyday digital electronics, including your credit cards and debit cards. But asymmetric cryptography instead has been propelling blockchains and a lot of other interesting applications a lot faster than they could have. And paired with Tangem, which at this point plays the role of the transformers 140 years ago, asymmetric cryptography can empower mainstream adoption of digital currency because it can carry capability of transacting secretly and safely all the way to the end user. So the time is ripe. It's now 2020, the year where the pivot is happening, and the decisions that the group of listeners today is going to be making from now into the next 2-3 years will impact the world as much as the choice of alternating current did in 1880. With great power comes great responsibility.
Okay, thank you, Sergio. So as Sergio said, our focus is on mass adoption, and we have a challenging task to coming up with an instrument that is both appealing to end users, to the holders, and at the same moment brings benefits to existing ecosystems, first of all to central banks and to classic banks. So that's why maybe even more important conversation is the balance between self-hosted or unhosted solutions and custodies. Because we are sure that purely custody-based and strictly centralized CBD system brings almost no benefits, both to existing banking system and to end users, because from the security and risks point of view, and from the perspective of the economic model, it will be more or less the same as an existing account-based system and the system that is centralized by central banks. So what Tangem works on as an unhosted solution, so something that allows holders and end users to be responsible for storing and operating their funds in exchange to allow permissionless and anonymous payments. We think that only this approach can really change the situation and can change the approach, can change the role of commercial banks and retail banks in the current ecosystem, because right now we still have to pay banks for storing your money, for keeping reserves, for KYC, for transmitting your funds. So the role of commercial bank is still very high, and if we want to see a real adoption and a real interest from end users, we need to shift the responsibility to the edges and give more cash-like experience to them. So basically, in our case, it means that security will become the biggest challenge, and actually each user will have to have his own HSM with him, and like you have your wallet for paper cash. So our solution and our approach is focused on security and on how to provide a really secure self-hosted solution to end customers, while retaining all the benefits of both digital and cash payments, including global acceptance. Next slide, please, Sergio. Yeah. So we are not trying to reinvent the wheel here, and what we're doing is based on proven and hard-earned standards. First of all, for standards for the security. So you know that mobile platforms and mobile applications actually are not really good to store funds directly without having second factor or without using some internal secure hardware wallets, secure hardware chips that really protects funds. So we are based on a stack of smart card technology, starting from common criteria, global platform, and EMV standards, which are used by Visa, MasterCard, so payment networks, banks, telecom, and we also use globally accepted standards like ISO, NFC, and Java card. So we are not having anything proprietary, and we are not offering something that is not proved on a global scale, because any risk with the cryptography and security is not acceptable on a large scale. So if you want to have a real payment system based on self-custody, you will have to rely on proven technologies only. So in our case, yes, Sergio said, the key feature of the technology is using the asymmetric cryptography. So the main difference from the symmetric approach that was used by banks and by payment systems for last 30-40 years is that the security chain and the number of middlemen between the holder and the ledger can be dramatically reduced, because when you generate your secret inside your smart card, inside your HSM, so basically inside your pocket, you don't need to rely on any kind of secure bank facilities, special supply chain, bank offices. So basically you make this secret for yourself, and then you're responsible for the safety of the secret. And our main goal is to make this path between the holder and the ledger as short as possible, so that all these security challenges that current payment system have will be alleviated. And basically the security role of commercial banks will gone, and their role will be reduced to mere gatekeepers. So providing KYC and changing digital currency to fiat. I think that's the most important part, Sergio. Maybe
yeah, absolutely. It's important to notice when Andrey was saying self-custody, what we really mean is your key is your crypto. So whoever holds the private key is the holder of the assets. And another way to call this scenario is full custody or unhosted wallet versus hosted wallet or custodial solution, where instead an institution or a custodian will hold the keys, therefore the assets. So if we look at the Coinbase or major exchanges or some wallets, they'll just authenticate the users and then they will keep the assets. What we have managed to build is a solution that doesn't require this intermediary step of ownership. So the ownership flows directly from the holder to the payee. And this is important because that's how cash works. And in talking about how it works, our first solution, part of a platform that Andrey described earlier, is card-based. So the cards are technically smart cards, but of course they're much more sophisticated than the other smart cards you see in the market. The secure element chip that you see here is able to do all the cryptography that Andrey just described. And it works from the user perspective like a store value card. But also it works peer-to-peer. And that's the interesting thing. So from the ownership and custody perspective, a user doesn't need to be taught how to get on board. Will just be given a card, and at the point, the card will behave like cash. Do we need to teach people how to keep, store, and use their cash? Not really. It's somewhat ingrained already in people's minds. So holding it is the key to keeping it safe. There's various configurations that can be built on top of the platform. So of course, multi-signature solution will allow to enable recovery mechanisms, and we're not fixed to a cash-only scenario, but that's the beauty of it, that all of these capabilities and features are programmable and are managed at the blockchain and at the application layer, whereas the card does a very simple job of keeping the keys safe, and it does that really well. So I'll give you a couple of examples now, what we mean by global acceptance. We built the solution, the platform, with interoperability in mind. So the first step of using a Tangem card is to just tap it on the phone, like I'm doing here in the video. No, I have to take a real one. This is made of wood, just for demo purposes. I tap it on the phone, and within a split of a second, I see what type of assets are loaded on this card. Here we see that I have loaded 100 USDC. In order to transact, I will set a transaction on a phone or any NFC terminal. And mind, it doesn't have to be my phone. It could be also the payee's phone or some kiosk or some terminal that I find somewhere. And all I need to have is the card to send money. And all I need to do is to know my card address to receive money. So we simplify both the receiving and the sending part of the mechanism. So what I showed you now is a closed loop scenario where every endpoint of a payment network is directly connected to the ledger or to the platform. And it enables peer-to-peer, it enables store value solutions, which could be extended to offline payments. This is very important because when we're talking about bringing everyone on board mainstream central bank digital currency, we have to understand that not everyone has a smartphone, not everyone has a smartphone connected to the internet, not everyone is able to manage the digital life. So just having a card where all you need to know is that tapping equals giving money, holding in your pocket equals keeping it safe, is a giant leap from requiring everyone to have an iPhone with the latest apps and App Store subscription. And when we want everyone to be able to use central bank digital currency, we also need every single merchant or payee to be able to acquire a payment, to accept it. And at the same time, we cannot expect every single merchant to install their apps on their phone in order to acquire payment. So we have extended our solution to EMV. For those of you who are familiar, that means Visa, MasterCard, Discover, Amex, JCB, UnionPay. And I'm showing you a video now of what we have built with respects to EMV. We have built a solution for transacting digital currency directly on the Visa MasterCard rails. We're getting certified as a card product manufacturer for Visa. In a few months, we'll obtain our certification. And I am at this point in the video in a Starbucks here in California, where I first check the balance on that specific card, which is a Tangem card loaded with 10 USDC on the Ethereum network. I then proceed to pay by tap on a Visa terminal at Starbucks. In a couple of seconds, my transaction gets approved. And within another 5 or 6 seconds, checking on the Ethereum ledger, I can see directly that the transaction has been settled. And I have been charged $3.65 and 6.35 are left on my ERC20 contract with USDC. Why is this important? Because we have transacted pure digital currency on a distributed network with asymmetric cryptography, with full custody, self-custody on the end user, without a bank account, without a custodial account, straight to the merchant. And this can work anywhere in the world. That's why we call our card or our platform the Swiss Army knife for mainstream central bank digital currency. It has all the features that central bank digital currency should have. And here I'm also happy to take a step back and see that some of you are asking, why are we talking about central bank digital currency? Is it worth the investment? Well, central bank digital currency is important just as much as cash has been in the past centuries. If we think that the global economy and literally people's happiness could have achieved without paper cash, then probably we don't need central bank digital currency. On the other hand, if we think that cash has propelled the economy and science and humanity forward, then central bank digital currency is cash V2. It's time to go to V2 for a few reasons. First, because cash is starting to become less useful with a lot of digital payment systems. Second, because cash is today still the only way to preserve anonymity and privacy, which are for certain countries fundamental pillars of the society. And third, because on digital cash you can build services, just like we have built a lot of things on the internet. You can build a lot of applications on natively digital cash. The conversation we're having today on Zoom is possible because someone decided at ARPANET to support the interoperability and to build for a future growth. And this is exactly what's happening with central bank digital currency. That's why I'm saying it's as important as alternate current was for the distribution of electricity. Therefore, blockchain are so I see other questions. Blockchains are clearly a pivotal part of central bank digital currency, but are not necessary. So it's important to stress this fact. Asymmetric cryptography is a real key here. Blockchains are one of the many ways that ledgers can be implemented with asymmetric cryptography. But we assume that most central bank digital currency will work either on a permission decentralized ledger or on a non-decentralized ledger based on asymmetric cryptography. So again, central bank digital currency is important as long as it is durable, secure, accessible, and private. And with our solution, we can support all these four very important pillars because it's based on asymmetric cryptography, because it's interoperable, because all the layers of business logic and monetary policy are built at the higher layer on a chain and an application level. And the tool, the card, has the sole functionality of keeping things very secure and very simple, very accessible. Just imagine that at large scale, it would cost a government no more than issuing $100 notes to instead have our technology in the beholder's pockets and wallets. Tangem does a lot of things on top of central bank digital currency, which are very much related to asymmetric cryptography. I'm getting myself repeated here. Multi-signatory is, for example, type of configuration that is usually restricted to people in the know. It's not really easy to find a multi-signatory wallet for mainstream. Our partner Vault, Lobster Vault, has developed a beautiful app that I recommend everyone to try to on-the-fly configure M of N and optionally use Tangem Cards as individual signers of that M. Moving on the ladder, we have also institutional applications. Our partner Soramitsu, who is a Hyperledger member and developed the Iroha project, is working to tentatively use the Tangem Cards, specifically the one you see in the picture and I also have in my hand, to authenticate and authorize batch transactions at central bank to commercial bank level. So the beauty here is that those transactions usually would require a token anyway, a physical token like an RSA key or a YubiKey. And with the Tangem card, we completely skip the physical token, the centralized physical token intermediary, and we go straight from the chip that the authorized person has in the hand all the way to the ledger to authenticate a transaction. So we're making faster, easier, quicker, and more secure. We do have also other applications for identity and anti-counterfeit. Ultimately, it's all about managing digital assets safely and for mainstream. So what we want is 6 billion people, probably more now, to safely be able to be given a card, hold a card, and claim their assets, be it a credential for identity, be it an object, be it money, be it central bank digital money. They need to be able to do it. That's why we're here, and we're very happy when developers come and help us and build on top of our stack. We definitely do not build a whole solution for central bank digital currency ourselves. What we do is provide this foundational platform where in a fully interoperable way, developers and system integrators can contribute on top. It's now time to go scroll through your questions. Please, Andrey and Sophia, help me reading through all of these. There's a lot of questions.
There's certainly a lot of questions. I think there's a lot of interest in what you've shared, and I think just there seemed to be a theme here about people asking about the responsibility for their keys and their card in terms of this idea of full custody. Do you imagine that people still need intermediaries as a backup? Kind of what happens if you lose your card? Could you speak a little bit more to that?
Yeah, of course. So the only way to keep a key safe in a card is for the key never to leave the card. And like George Orwell wrote in 1984, the only way to keep a secret is to also hide it from yourself. So the solution developed by Tangem does not allow the private key to leave the chip. It's generated within the chip, stays within the chip, never leaves the chip, signs transaction, but the key doesn't get out. This means that if you lose a physical card, you lose a key. There are several layers of protection for this. Security delays to prevent drive-by attacks, PIN codes, obviously, to prevent a third party to take ownership of the card and transact with it. But also we have to consider that you can configure your assets on the card in different ways. If your card is a single wallet, single signer, clearly losing the card means that you lose the assets. And that's okay if you're just keeping your pocket money in a Tangem card, just like you're okay to carry your $50 or $100 in cash in your wallet. You're accepting that you may lose those eventually, maybe once or twice in your lifetime. If instead the intention is to have more assets or more sensitive credentials loaded on the card, then obviously it's time to set up a multi-signatory wallet with multiple signers that can recover the assets in case one of the cards is lost, and then move it to a new solution or new wallet. So yes, you lose the key, but you don't necessarily lose the assets.
Right, depending on how you
sorry, and we need to say that it's also about the responsibility, because this multi-sig recovery scheme can be organized in that way that this intermediary responsible for the backup has no direct access to the recovery key. So it will be stored encrypted, and it's a special service. So you can go there with your ID it will be recovered by a special password held by you or by another entity. So it's all about the recovery mechanism. But we don't ask users to write down 16 words passphrases and do all the other crazy stuff. Yeah,
there's no social engineering or phishing or other type of more mainstream hacking that can happen here, because I don't know the key. I can't tell you the key, even if you ask me, please, or if you tell me that there's an emergency. I see another question about governments. Can governments mint Tangem cards, or does Tangem have to create them? So we have a silicon technology, chip technology, firmware, intellectual property, and then from then up, everything's open. So the SDKs to interoperate with the cards are on github.com/Tangem, and therefore a government or anyone can just take it on from there upward. But most interestingly, the private key is generated within the card by user command. So we are not involved with the generation of the private key, and that's the most important thing. And that's why we do not, a trusted environment is not needed to make our solution safe. It's safe because the keys are generated in the card.
Thank you. Another question, just to tie this up. Somebody says, definitely agree with the creation of this cash-like digital money. Are there any regulatory challenges that Tangem has to overcome?
Not really, because self-custody wallet or unhosted wallets are defined by FATF being non-regulated. Just like when you buy a leather wallet or a bag, you don't have to fill in KYC. It is your responsibility to manage the money that you put in that wallet or in that bag wisely, and it is a responsibility of intermediary parties that transact the money to you. So the travel rule and all those things apply to all the intermediary parties, but they don't apply to the user holding keys autonomously. This card is helping a user keeping a key safe. That's what it does. Therefore, it doesn't really touch the money directly. Mm-hmm. So it actually simplifies a lot also all the KYC.
That makes sense. In your presentation, you also mentioned the viability of Tangem cards in maybe less developed countries, whether you have access to internet or a smartphone. Can you tell us kind of what the prerequisites are for the user in order to use the Tangem card? And also, what are the most important factors to consider when entering new markets?
Yeah. The prerequisite is having one hand to hold the card, because an NFC terminal or a smartphone is only needed when transacting, which means similarly to what you do with your Metro card, you don't need to check your balance all the time or to have a phone to transact with it. You'll only tap it on the terminal when necessary, when topping it up or when paying. So that's the base case. So in base case, users don't need any education, don't need any infrastructure, don't need any phone. What is needed is to have a critical mass of users, clearly, endpoints, so acceptance and payers. And that is usually achieved by distributing a minimum amount of many thousands of cards in a certain location where everyone is aware of how they work, and having certain merchants either through global acceptance or through merchant apps that they already have with new SDKs or dedicated apps accepting the payment. So the critical mass factor is always there. There's a network effect that works a little bit like in the social networks, where every new user and every new endpoint to the network adds value to everyone else. So you cannot start a payment system with just two people. I mean, it only works in one case. That's
definitely. A few practical questions here. Somebody's asked, do you need a different card for each currency, or can you load multiple currencies on one card?
So This is a product choice that we made. We do have a web shop called shop.tangem.com where we sell this type of cryptocurrency cards. Sorry, it's okay. Now you can see it better. This type of cryptocurrency cards, and they are one per currency. The reason being is that, as I said, you want to keep it in someone's hands, and you want that person to start using it on the get-go. No education, no on-ramp, no weird choices and scenarios. So tap, check your balance, tap, spend, and send the currency. So we decided to keep our card single currency for now. Of course, technologically speaking, we could evolve into more sophisticated solutions.
Okay. And another question someone asked is, how do you monetize this product?
So as I said, the IP is mostly in the firmware and also in the chip design and chip ownership. So there's two ways. One is to sell the chips, and the other one is to license the firmware, which could come either under the form of revenue share deals with the payment networks or longer-term leases. Okay. And that's why it can work very well with system integrators, because we're very flexible on the way we can implement a solution.
And just to zoom out here for maybe a final few questions. You mentioned a few other applications that you can envision for the Tangem card. For example, a digital identity. You know, one, what are other applications that you do envision for the Tangem card? And two, do you think a national digital identity is also a prerequisite for central bank digital currency?
Yeah. I'll start actually from anti-counterfeit. We've been in the market now for a year or so, and this was our first launch case with anti-counterfeit. It's a New Balance. Sorry for the. There you go. It's New Balance, and they use our cards for title of ownership, blockchain-based, in collectible sneakers to enable post-sales experience and also secondary sales for reselling collectibles. And of course, we have a lot more to do in anti-counterfeit space. We can also make smaller tags that are more friendly to packaged goods scenarios, like this one, small here. Identity is very interesting. As I said earlier, ultimately boils down to managing digital assets, because the future of identity is digital credentials. The W3C is doing a really good job at defining the platform and the standards for the future of identity. The centralized identifiers, DID, COM standard is mostly taking care of it, and also the verifiable credential standard. And we are very happy to announce that in 2 weeks, we will have a first demonstrative app that will be fully compatible with those two standards that I just mentioned. That's a milestone because it will allow holders of credentials to not necessarily be bound by a phone in order to hold and present their credentials. Just like what we're doing with central bank digital currency, we want to free people from the phone in a good way, meaning you need to be able to use and spend your money, and you need to be able to prove your identity and hold and present your credentials without the requirement to have a phone all set up and connected. And so digital identity in the next 2-3 years will have a huge leap forward because of this DID and verifiable credential standards. And in 2 weeks' time, we'll launch our first card that natively can hold a credential encrypted and self-sign it on presentation.
Excellent. We've come up on the hour, but if there are any other topics you'd like to expand on or any final words you'd like for the audience, please go ahead.
So, Joe, I think we can briefly return to regulation because there were many questions about that. And how do we sell our cards now? It depends on the local regulation. So basically, we have a partner in Switzerland where KYC is not required for such kind of product because our cards have been qualified as a sufficient tool to prevent AML. So it means that we can sell our cards physically in retail stores, and we do that. We can sell them preloaded without KYC now, below the limit defined by Swiss law, by the new Swiss law. It is 2,000 Swiss francs. In other jurisdictions, of course, it's not possible. Somewhere you'll be required to present your ID. Somewhere you'll be required to buy crypto yourselves and load it into the card. So it all depends on the local regulation, but of course, we rely on global guidance from FATF and travel rule, which will in the end allow to use any kind of digital assets below some limit without KYC. And that will be acceptable risk for AML procedures. And so, yeah, and the second answer about how these cards are qualified by the government. So if we are talking about pure wallets without this Visa card functionality, that's rather a gift card or hardware wallet similar to Ledger. But if we're talking about direct Visa acceptance, that's a prepaid card or a stored value card that must be issued by a bank, but the issuing bank will not play any role in communication with the customer or storing funds. So it's purely technical role. Okay.
Great. In the meanwhile, I knocked out like 5 or 6 questions on a Q&A. So I think we're perfect here.
Excellent. Well, the questions have certainly been coming the whole time. We hope we've answered most of them, but we'll make a recording of this webinar available to all of you and circulate it. You can also check it out on the Global Blockchain Business Council's YouTube page. And we'll follow up in an email where we will provide helpful links to learn more about Tangem, get in contact with Tangem. Thank you, Sergio and Andrey, so much for joining us. It has been truly excellent to spend these 45 minutes with you.
Thank you for inviting us.
Absolutely. And thank you to all of you for tuning into today's webinar and being such active participants. We host these every other week, so you can join us actually on August 6th for a conversation with GBBC member Orbs on building a blockchain-based health passport during COVID-19. We cover a range of topics on these. You can also follow us on LinkedIn and Twitter and Facebook for regular updates on programming. Thank you again, Sergio and Andrey. Thank you for joining us.
Thank you.
Thank you. Goodbye.
Bye.
Bye.